Hello and welcome to the 15th annual LD Micro main event. I'm Jonathan Miller and I'm here with Joseph Alagna, CEO of Joseph Gunnar, a banking and investment firm. Joseph, would you like to tell our audience a little bit more about Joseph Gunnar and what the company does?
Sure. Joseph Gunnar was founded in 1997. It's a full-service investment bank. We raise money for private companies, bring them public companies that do additional capital raises, and also just provide regular financial advisory work. Portfolio for retail clients.
Amazing. How did you get involved with the company and what's your background?
I started on Wall Street in 1988, worked for a couple of firms before I decided to venture out and start my own broker-dealer. I couldn't really find a home that really provided me with what I wanted as a retail broker, which I was myself. And I decided to start my own shop and stretch out the breadth of the products to offer to brokers in a more boutique environment. So that's why I started the firm, and we do have a lot of verticals in a firm our size. We do syndicate and investment banking, as I said, corporate finance. We also have a fund called the Buttonwood Fund, which is a pre-IPO fund that we started about 12 years ago with Facebook and Twitter, our initial two investments when these companies were private. Since then, we put about 24 other companies into the fund, the likes of DocuSign, Lyft, Airbnb, Spotify. We invested in all these companies when they were private before they came public, and enjoyed some significant exits along the way.
Sounds like you've had some great success so far.
Yes.
Where does that passion stem from for finding these companies?
I guess I was always attracted to trying to find companies at the startup level and try to fund them and take them to the next level, and as far as we can, eventually hand them off to a larger firm, do a capital raise. And we've had many that have gone that route. It's been a passion of mine since I literally got out of college to fund companies that I think are, have a significant interest in. They might be doing something a little bit different, some type of disruptive technology, changing the way an industry does business. The likes of, like say, a DocuSign, for example, really came in and really changed the way things and documents being signed on the internet as an example. So we saw companies like that. We really like to, very passionate about what we do, and we, not only do we put our own money in, but we, our clients' capital, and we, we like to take them as far as we can. The path to let companies just get larger until eventually they go to a bulge bracket firm if they continue to grow. So.
Absolutely. And it sounds like you're keeping your eyes on a lot of different industries and sectors. What are some of the current trends you're seeing in the given market?
Well, this year's a very unusual year. It's capital has been very challenging. It's very difficult to raise capital given the volatility of the market now. It's companies right now are in positions that if you have to raise capital, you got to go out there and you really need to understand how challenging this environment is, and if there's capital to be raised, you need to take it now, because if you really postpone it and think, well, maybe the market's going to recover in a few months or so, you really run a risk of things getting worse before, and then getting yourself in a situation where you have to raise capital in a very desperate situation. So, so as far as trends are concerned, we've this companies continue to innovate. Technology continues to move forward, and post-pandemic, I think there's there's a lot of things that got moved forward during the pandemic, and now we're getting more back towards a more normalized environment. With that said, the need for capital for many of these small companies, the startup companies, has become very significant. But the market itself has become a lot more challenging to raise capital. So, my advice really is for these companies that if someone puts a deal on the table that you think is semi-attractive, don't be too greedy, because if things do get worse, it's going to be challenging if you raise capital, for a few months going forward from now, should things continue on this path. So that's really my advice on companies that are trying in this market.
That's definitely some great advice. And leading off that, is there any guidance you'd offer to companies that are looking for financing right now?
Yeah, just to continue with that. That thought is just is try to raise enough capital to get you probably through the next 12 months. You don't know what tomorrow's going to bring. Hopefully, things do start to change going into 2023. It's been, right now it's almost been a year since the market really started to slide, since Thanksgiving last year, especially with the microcap and the over-the-counter market. And it's been very difficult for small companies venture companies to really go out there and raise capital the way they have been over the last 10 or 12 years, where private capital was readily available and companies stayed private a lot longer. Now the need for capital is continues, but that path has been shortened. So companies are looking to try to get out of the gate a little sooner, to try to tap the public markets, but the markets are a lot more difficult. So we're seeing a lot of companies fail. A lot of companies are trying to come public and just not, their model might be too long in runway to the path of profitability, and the investors don't have the patience for that right now, given the market environment. So I do think, my advice to companies are really looking to raise capital now is to focus a little bit more on a shorter term runway to profitability, and not necessarily just looking to grow at all expenses, and be able to, if you put a model out there that really stretches out that path to profitability for a few years, you can find it very difficult to raise capital in the current market condition.
No, absolutely. And for interested parties out there that may be interesting in getting financing, what would be the best way to get on your radar?
We are a very entrepreneurial firm. I've got, the best way to get in front of us really is we're very hands-on. We're located in Manhattan, right next to the New York Stock Exchange. We also have an office in Long Island, but we're out there in the small cap sector, the micro cap sector. We have, for a firm my size, we do have some pretty good exposure. So it's very easy to find us. If you do have a company that looks like it might be a fit to come public in the next couple of years, if you're looking for bridge financing or possible IPO, or if you're an existing public company right now looking to raise additional capital, we're getting deals done in this market. I can say it's been a very challenging year, but we've closed a lot of transactions. We continue to do so. It's a little more challenging, a little harder this year, but we are closing the right deals. So they're out there.
That's excellent news. I think your work speaks for itself. We always enjoy hosting you here at the LD Micro event.
Thank you for having us and my team, and I really appreciate it.
Absolutely. Thank you so much for stopping by, Joe.